Hello, everybody. It is the week ending February 24th, 2012. We'll take a look at the metals, five of them, the four precious metals and copper. But first, and silver will end it, but first will be only Friday, or it's like the last day of the week, and I'm going to zoom in on this. Because I did a video last year was the market was going higher somewhere in here. Of Friday always going higher. Why? Because when I was watching the charts every Friday, I'd see the exact same thing week in and week out. And that was the market in an uptrend, making higher highs, higher lows, and on that day, usually bottoming at the morning at some point, but however it went, it was always a bull day, and it always closed near the highs of the day. It did it quite frequently. Not all trends stay the same, however, because how profitable was it playing some AGQ for the day here? Yikes, yeah. Pretty down, going from 36-ish or so down to like 30. Okay, so we lost like 15%. Then you double it, 30%. Good job. It happens. That's part of the game. And really, since even in somewhere in here, it's pretty much been 50-50, probably breaking even, that is. Even since this point in here, somewhere around here, it's just breaking even. Not really going up or down, but we did have 3 straight weeks going lower, too, coming into the week. And we'll get into the days of Monday, Tuesday, Wednesday, Thursday, and Friday for silver going back to 1968, but that will be at the end of this video. First off, let's go to copper. This is the weekly chart. I want to talk about this candle. I don't know what name, like a hammer formation. I used to call it a cattail. I don't know what it's called, but it's one where you go down from where you opened, but you close pretty close to the area where you opened at, which is exactly what happens here. Significant retracement. Now, this is an amazing setup right in here. Amazing setup. Why? Because you're at a huge level of Fibonacci retracement, and you did it after having 3 candles higher, and then you have this consolidation, which means usually one of 2 things is going to happen. One, you're going to get further gains within the price action, which obviously didn't happen. But or is that you have a little bit of correction of some sort, and then the thing really gets going. I don't know if it's going to get going, but this is just a little bit of correction, and this candle here is it's showing that it's ready to get going if that's what's going to happen. But failed moves bring fast moves, so it's very often that this brings up movements. But when it doesn't, from failed moves create fast moves. You'd be lucky if the bottom is anywhere not lower than around 350 per pound. And then, of course, this is where I would suspect it would go to, if, of course, it's a failed move. Next up is going to be platinum. But before we do, copper was up 386 for the week, up 14 cents or 3 3/4%. The volatility is small and will remain small next week. Platinum closed the week up 80 per ounce, up about close to 5%. Volatility this week was small. Next week it will be neutral. What I like about doing these videos is I can just talk about different setups and things to expect, and whenever I see them on the live charts, I'll talk about them, so let's talk about it. If you've been watching my videos, you should know that whenever you can confirm that you're going past these levels of Fibonacci, you're going to the next part. So if you can confirm you're going by here, you go in here. You confirm you're getting by here, you go into the previous top. And the same works true in bear markets, or if you flip the chart to the reverse, basically. Therefore, that's the situation where if we hold above here, yeah, we're going up to that point. But I want to talk about situations where they just skyrocket. So if you ever see a chart that breaks past the 61.8 and just gets going, What does that mean? If you have a chance to look at a silver chart, I think the 5-minute chart on Future Pros and Forex Pros would work. Look at the silver price action on Thursday on the 5-minute, 1-minute, or 2-minute time frame, and look at the morning session and how its significant Fibonacci retracement was for the day. Because when I was watching it live at the time, I noticed that it didn't find much resistance here, and it just kept on soaring like no other when it broke through it. And at that point, I'm saying to myself, this thing is going for the day because of that in itself. So if this thing gets going, then I want to expand this time frame out from weekly to maybe monthly or quarterly, and then look for upside targets within that. Because that's what normally takes place, is that not only is this level of resistance going to be very weak, but it might be very, very weak where it's something like boom, and then breaking it. It's just one of the off many things that can happen when a level is weak resistance. Just something to look out for, because within this 1, 2, 3 good candles in a row, then you have correction within the 3. You have an up candle, correction within the 1 candle, and now we have another up one again. So just look for whatever, basically. So I'm done today with platinum, and I'm on with palladium. This is palladium, and I have 720.27 as a significant level. That's because that's the mark from this point to this point. This is also important in silver as well. Now, the reason why this is important is because you found successful support at this level in here. You can just imagine, just assume this is silver 17, because we're going to be looking at this very soon anyway. Silver's 50. This is 26, where we found support on 2 occasions. And this is 33. Therefore, it's doing a little bit better in correcting than silver, or at least thus far. That's not important, though. What's important here is that since we've been at this level, we've had really 3 sideways correctional moves since this move here ended, or really this move. And at this point, you don't know really what's going to happen unless you're in the know. But when you have further momentum breaking above this mark, then obviously you're going to be looking for long setups and maybe try to find support at this mark. But if it goes lower at this point in here, this is the next level of significant support right in there. Gold. Within this, let's see, what's the best way of explaining this? I'm going to talk about a double bottom in here. And that's important again with silver as well, because they have a double bottom formation as well. But before I do that, what do you notice is happening? We're having deja vu. Same thing has happened twice. We go down to 1520-ish. Up here, we go down, we go up. Same thing. Pretty much, that is. But the more often resistance or any significant level is tested, the more likely it's to be taken out. So you have a significant test in here. But not only do you have that test, we have a test again here, and now it's breaking it. Thus far. Whether it continues to get going, well, the quarterly chart is like a constant uptrend like this. So the path of least resistance is by far higher. But let's continue on within this type of candle in here. This occurred after once we came to this significant mark. From this high to this low, this was the first level to try to make this a failure, because if you can successfully break that level, it becomes a failure and the trend continues in its current trend. Now it tried to get above it, but it didn't confirm to stay above it though. And this is that breakout candle where if you see it at the end, you're expecting it to either continuously go higher or with very little correction. So this candle here is fine. Then this red one's fine because it can go back down a little bit before it gets going. Now this one might have got a few people stopped out. And it's still a higher low to here, but it really has to be the low because it's already lower than this low, basically. And what happened was it found this lower high, and it really didn't have that great of a failed move, because in order for there to be a fast move, that is, because oftentimes from failed moves create fast moves. Now, a failed move from breaking out here should have been going down to 1440, 1460-ish, but that did not happen. So therefore, is the failure to create a failure going to be a failed move? If you understand what I state by that. Because if that's the case and this thing gets going, this thing could really, really take off. And we talk about its numbers. Gold was up 50 for the week, less than 3%. It's only 7.5% away from this high. So that can happen in 1 week. Not so difficult anyway. At least a good week, it can gain 7.5% anytime it wants to. Volatility ended the week tiny because of those three minuscule candles, and because it was a bigger size week, it will be up to small for the week. So we have tiny volatility in here within massive volatility. I don't know where you need to start, but I can tell you the good example might be right here, where if you look at all the moves that happened from this point forward compared to all the ones that precede it, what you will notice is that from this point on, it's been much, much bigger. Look at all the size of these red and green candles compared to the size back here. It's nothing in comparison. So things are getting going. This tells me that one of two things should take place. And one, is that it's going to be really volatile. So the first one is that it continues to have further upside gains in a volatile manner within this, which should mean equal or a close to equal volatility from what we've perceived in here, maybe even a little higher. Or we have a really big volatile move down, probably at least as around volatile as we were, but most likely even more volatile. I don't think that would be the case, but it is brewing up for something big. This is how tops happen. When the top of a market comes in, you get these bigger, more volatile gains, and maybe you consolidate before it goes down. But I still don't think that's what it is. I still think it's going to continue to go higher. And when it stops going, well, when the Fed is pretty much either gone or at least successfully done a real financial reform, then maybe it might stop going higher. But that, again, this is just my personal opinion, and do your own research. But by watching my videos, you might be doing some research right now. Again, confirming and holding above this level means we're going back up to this high. Next up, we're going to look at silver on the daily chart. For the day, silver was up about 2 cents. 2 cents, or 0.06%. But it was up 3.25 yesterday. And it's neutral volatility, but with the smaller move, it's going to go from neutral to small on Monday. So thus far, since we've broken out of this range, it's really been only one breakout candle, because the breakout candle before that was just to get to the upper part of the range. I do like the formation and how it did take this undercut of this previous range, because that's a nice little small failed move that has at least generated a small fast move, which would be a minimum to the top part. So it's done the minimum type of move possible. And I've heard a comment about stating where everyone wants it to go down. Maybe even we'll just even say this Fibonacci level here of 3170, as we can build that right shoulder for the inverted head and shoulders pattern, which is false because that's not what I want. And nor do I even think it's a favorite or likely scenario to occur. For there's a decent chance that somewhere within this band will hold. I would even consider this part here, maybe down to this the lower prior part before this thing gets going, and we may not even find support here. For it's difficult to state what's going to happen. We were at this previous high, now what? Well, we've had one day doing really nothing. But it's a good nothing because it didn't sell the market off, basically. Weekly chart for gold, silver. See, the head and shoulders pattern would be this here, I guess. But the only thing is that it technically hit 2610. And then it technically went somewhere. And then it technically went 2614, and then it went back to its previous somewhere. Because that's how double bottoms work. You go down, you hit a point. It just happened to hit this Fibonacci point. And then you have to go somewhere, which is really anywhere for that matter. And then back in or around that area. I'd have to say with a 4-cent difference at 26 that it's an exact hit. And then back to that previous level. And, well, its previous mark was, it was again another exact hit. So we've hit a double bottom scenario. Now, what some people like to do is calculate the length of the height, which means that from 26 to about 35, that's a gain of about 9, which would take you to 44. That's a possibility. Even one other way of doing it is just taking the height of the Fibonacci retracement, which would get you to about 43-ish or so. But I don't even... those ways are effective. But I'm going to stick with the Fibonacci analysis instead. Holding and staying above this level for 7-8 periods, couple months, would be something I'd be looking for, and then that would be confirmation of going to 50. Now, there's two different ways of looking at it, because you got this high, you got this low. And if you look at any of the past 3-day charts, I'll have the numbers from this $50 high and the 26 low, which pretty much has the exact same line here. And then again, just above, or below, 39. Somewhere in that area there. So what I would be looking for would be a move up to that 38, 39 area, and then find some sort of way of correcting from there. Because how it plays out is very difficult to state. But here's what the situation is. It's already went enough now that if it happens to go lower, then you've established a failed move, which is extremely common. It's probably more common that if we're going to crash down anywhere those levels people talk about, that it's first going to at least do something like this before it goes down. Whether that happens or not, I would say doubtful, but possible. Therefore, how does this play out? Do we have continued further upside? If this thing has weeks where we have 8%, then we have another 7% gain, well, then we'd be up here, and we'd be like, I'd be kind of wondering if this thing is, what's going on, and how it's all going to play out. I talk about possible breakouts to the 75 and 120 level. How we get there, or what needs to be done on a fundamental basis with the banking crisis and the banking system in itself, I don't know. But how the methods of numbers here work, that I do know. Okay, so basically pretty much going to finish off this chart at that. But again, this level here, what I would like is a test to this level. Find some sort of support in some sort of area. Break it when you come up to 50. I'm going to make that in a later video because this is long enough. And we're not there yet. This is Monday, which is going back to 1968. This is LBMA, which opens the market, or at least like 4 o'clock. So it's basically Friday morning to Monday morning, how it plays out. And then each day is the same after that. So this is a chart on silver, only on this day. It's set up for how many times greater, which means it closes at 2.06. So 2.06 times greater, that's 106%. You can see it pretty much went down to 50 cents or 0.5. That means it lost half its value at one point. Tuesday's the bad day. Yeah, 19 cents. So if you subtract 1 from 19, you get 81. That's how many percent it's down only on Tuesdays, or from Monday morning at like 4 a.m. New York time to Tuesday morning New York time, same time. Not doing so good. But Wednesday's a big update. It's a nice looking chart too, because it's almost like the gold chart going back to, well, the entire gold chart going back like, 35, 40 years. Because you have a nice up move, very tight, long, sideways consolidation, and then slowly but surely going higher. So it looks a lot like gold. Thursday is like an inverted Bart Simpson head formation, which is where you go down fast, do that look of the head, how it goes up and down, and then you go right back to where you were before. Friday's an odd looking chart. It's odd. So one person was mentioning that Friday is the day where it's been going down. He's right, going back to like 2005 or so. Like 6.5 down to, where are we at, 2.5. It's lost over half its value since this point in here. Overall, it's gained 143%, but and what's even more odd is how we see from 1970, from this point here to this point there, this is when silver is going higher. This is going lower. And then from 80 to like 2000 and something, and so silver went lower and this was going higher. And now for the last like 7 years, silver's been going higher and this is going lower. Go figure. I can't. Thank you for watching this 22-ish minute or so video. And take care. Bye-bye.